Hey you guys, alright, so in this video guys, we're going to be talking about wicks. What do wicks have to do with trading and how can you use wicks to profit? I've mentioned this in my videos. It's a very important topic if you want to understand where price is going and where price objective could be, okay? So we're going to be going into this. We're going to be talking about daily, 4 hour, and we're going to be going down. And every single time frame is the exact same. This is why price is fractal, and we can start to use this knowledge for our benefit to actually get really, really good high RR trades, as well as scalping the market properly. And you can understand then where to take your trades to the mitigation cycle, where things have fair value gaps, imbalances, POIs, etc., and have the knowledge to understand if price is going to go in your direction, okay? So what does a wick have anything to do with what you might want to be trading? Well, in this scenario here, guys, we're going to be talking about the daily candles. And if you were to look at this illustration, this would mean the daily is what? The daily is bullish, okay? So when you are bullish, all right, right here, okay, you have your open, okay, price retraced, and then this was its daily high with then its close. So inside of this price action, this wick, okay, represents the daily low. Okay, so the daily low. And then this wick is the high. Okay, so we're marking the daily low, daily high is your trading range for this day. Okay, and what typically will happen when you have a bullish move is you have obviously the open, or sorry, the close is where price will start, and you'll have typically a few different scenarios. I mainly look at 3 scenarios. You're gonna have, let's actually do a gain box here. Okay, so inside of this candlestick range, you will typically have price come back and tap around the 25%. I think this is set at 25%, yeah. It'll tap the 25%, potentially the 50%, or 75%, or the entire candle body range, okay? Now, how do we use this to find POIs? Well, inside of these areas, you can scale in, and I'll show you how to do this. We can scale in and look for our POIs on the lower time frame. So the 4 hour, maybe the 1 hour, and then we start looking for price action to do our chalks. But when we're talking about wicks, you guys, wicks here, and I'm going to do something here. I'm going to do one more candle here to give a good illustration. So let's say price was, this is probably, okay. So in this case, we're daily bullish. And in this price action, if price is bullish and going to move up, then the wicks should be respected. This wick should be protected in terms of a retracement to go bullish, because this is going to be your lower time frame retracement, and then price will continue up, okay? Now, in situations like this, you guys, okay, where this is a fair value gap, so let's mark this out. Okay, we have a fair value gap. When price decides, for instance, to, inside of price action here, not respect this wick, the daily or the 4 hour or the 1 hour will break its internal structure. Okay, it will break its internal structure. So let's just, I'm going to go here and we're going to go hourly So we're just going to say this is your hourly trend. Okay, so if your daily is up and there's a fair value gap in the daily, what will start to happen is your hourly will break its trend. Okay, so we're going to show you what this looks like from a wick perspective. Okay, you now have liquidity taken. Okay, remember, hourly, your wick should still be respected. The only time that price will not respect the bottom closure, so basically your low of your hourly move on the bullish, is if price needs to mitigate something lower down in order to make a proper retracement to go higher on a higher time frame. This here is the magic, you guys, on why chalks are what they are, and for you guys to get your trade setups. So on the hourly, if all of a sudden we see a high taken and then a low taken, okay, you now have wicks that are not respecting normal bullish pressure. Instead, we have now, so let me just move this here. So if this was your hourly on the daily, and obviously it's probably not to perfectly scale, but this was like, say, your FVG here from a fractal perspective, what's about to take place in the wicks, you guys, is that price is breaking the internal structure of the hourly, as well as obviously the internal structure of your 15-minute. So on a fractal scale, this would now start having tiny micro 5-minute trends down with a pullback and then tiny 5-minute trends down, because the internal structure of your hour has to break character. The order flow of the hourly has to break in order for the daily to mitigate the FVG. And when this starts to take place, and now all of a sudden you have a high that immediately did not respect the low, you have an order flow change. And what are we looking to do? We're then looking to take trades here as our supply, because what's price going to most likely do? It's going to most likely come back up to then mitigate this imbalance. And then, because again, price in a lot of times, you guys, does not just melt for you unless maybe a news event or something like that, right? So then price is going to come back up to mitigate. And now we have our chalk with our ability to sell, okay, back down into the FVG. So price here will look something like this. Okay, sorry, I don't know what the heck happened here. So something like this, all of a sudden now, price will break its internal structure to fill this FVG, okay? And then all of a sudden, you'll probably start to see price rebound and continue back with the daily flow, okay? Now, these FVGs can look like rally-based rallies. They can look like solid FVGs exactly like this. They can be demand, etc. But the wicks here, you guys, are powerful because when price is doing something, like this, this for the time being becomes your strong high, because that's your daily. The order flow has shifted, and then we, as traders, can look for our POIs to sell to, and then we can start to look for our POIs to buy. So for instance, if price then did something like this, what would this be? This would be this movement on the 1 hour. And what would this be? This would be your liquidity that took out this low. It then took out your high, which means this is now your strong low, and you can now look for your retracement to buy on the higher time frame. Okay, so the wicks, you guys, tell us a story, because if you're in an uptrend, then price should be respecting the bottom wicks. If it doesn't, you have what? A change of order flow to somewhere. It's our job to figure out and understand the markets of why. What is that somewhere? Okay? And typically that will coincide to some sort of imbalance. It will coincide to a rally-based rally or a drop-based drop or a higher time frame fair value gap, just like this. Okay? So inside of now this price action, we have the confluence to take our sells from here, and then as price moves away, we have our confluence to start buying again on the lower time frames for crazy RR trades. All right? So let's now go into the charts and start to look at how this relates to real, true price action. All right, here we go, guys. So we're on the daily, and we're going to be flowing with the mitigation cycle of the wicks. Okay? So in this instance here, we're obviously in a downtrend. But as we all know, not every downtrend, it just melts and melts and melts. Okay? And what did I talk about wicks in terms of where they're allowed to go on the daily or any time frame chart? But the daily, obviously, because it's a bigger candle, we can start to look at where wicks start forming. Okay, so in this instance here, price made I would say it's a lower high from here, but obviously this would be like a QM pattern. But we made our low, lower high, lower low, lower high. Now, why in all of this? This is your continuation downtrend. Okay, price took out liquidity, and then it starts taking out the lower end of these wicks. So this is your daily. Now inside the 4 hour here, there would have been a chalk, because this took the high. Sorry, I'm going to make this smaller. This took the high, and then inside of your 4 hour structure, price took the low, right? This was responsible for the high. It did not hold, so price came back up again to mitigate what? Some sort of 4 hour imbalance. And that would have been a massive sell opportunity, because with our understanding of wicks, the wicks should hold. And if you're in an uptrend, your bottom side of your wicks should hold. And in this case here, you took a high, price ended up starting to take the lows, so you can look for your continuation model to the downside, right? And then what do we start to see, guys? It's in some cases, it can mitigate higher, but when price is really trending, guys, you'll notice this a lot. It starts to fill around 10%, 20% of the previous candle, as you can see here, and it just keeps moving. Now, in the case of these candles, what happened? Well, price came out, it took a low, and then it took the high. What does this mean for us as traders? Well, most likely, price has had an order flow shift to mitigate some sort of imbalance. So as traders, we can now start to look for our POIs here to take buys into the imbalance. Okay? And once this starts to take place on the lower time frames, we can dive into different areas in the lower time frames. You're going to start to see that the top side wicks, again, are starting to get respected as price moves back down into the trend. And again, what took place? We have a low, which is a chalk. So we have a low taken, and then your top gets taken. So what do we have now? Now we have an order flow change again. You could be saying that maybe you think price is going to fill this fair value gap, and these would be really nice lower time frame buys up into this zone. We don't know that price is going to go higher, but once price, okay, starts to respect the bottom wicks, you can now assume the daily is in some sort of uptrend into a different POI because this higher high might actually have been a pullback on, let's say, the weekly. So now price is wanting to mitigate into this, and then it's going to go lower. And what did we talk about on the daily, where price will mitigate and break structure? Okay, price will break structure if there is imbalance down here from a rapid movement. Okay, so if we were to put this in replay mode, okay, and we actually mark this area out. So let's just do this, okay, take this off. Price created a rally-based rally, which is a continuation pattern, by the way, but it broke this wick because the internal structure of the daily needed to fill some sort of imbalance, which was this order block. And if we keep going down, we'll probably find some sort of fair value gap with an order block. And in fact, we do find a nice fair value gap. That would have been a nice trade, but it came into and tapped the actual order block. So when price, guys, on the higher time frames, because remember, this is your daily wick low. So price respected it. But on a different daily, so inside of this daily move right here, all of this, okay, from the 26th to the 27th, this was your daily low. And price decided for one day to break its internal trend just to take out and grab the liquidity to fuel its move. And in these cases, you guys, we can start to potentially anticipate these when you have a chalks. Okay, so what do we have? We have a high that immediately starts taking out lows. And when price comes back in here, this melted and then shot up. Okay, now it's hard for us to say, but I'm pretty certain that this candle here probably melted, came up, closed, this one retraced again to form what? It respected the low because we are in an uptrend, and then it wanted to, on the lower time frames, mitigate again what? A fair value gap. We took a high, we took a low, fair value gap, we filled it, and we kept going. Okay, this is the wick story that we can start to use to understand the mitigation. Okay, so again, if we're talking about trading with the wicks, we can start to understand how we might be able to use the knowledge of wicks to get intraday potential trade setups. Okay, so in situations like this, if you are coming into some sort of, let's find a POI. So let's actually use a POI from an order block and sent out. So I think that would be a great idea where I can talk to you guys about how this works. Okay, so this is the 4-hour order block on GBP USD that Ann sent out. Okay, so let's say you're on the hour, all right, and you want to understand how you might be interested in taking a sell from this order block. All right. When price comes back into this order block, there's absolutely no trade here yet, okay? Now, price takes out liquidity, so it actually took out the order block, okay? And what we're looking for, guys, is a change of order flow from a regular mitigation story, okay? And that is where price is going to respect the wick. If price wicks down here and then goes, we're still in an uptrend. But if price takes out this and takes out this, that's a chalk, right? So in this case here, we have a high and we have an immediate low. This is your chalk. You do not need to wait for price to come back here if you believe this POI is going to reverse price. You can absolutely be safe to see if it starts trending down, and then you can wait for sells up in here, and we'll get into that here in a sec. But what you can do from this point, guys, this is now telling you something. You can drop down to the 1 minute or 5 minute or whatever, and you can start to now look for, okay, your change of order flow on the time frame you're interested in, okay? So now I can go to the 1 minute and I can start to look for, do I have change of order flow, all right, inside of price action? So right here, let's go to the next candle. I was helping a student out with this earlier, and this was a perfect example. Right here you have a high, okay, and an immediate low of this rally-based rally, okay? So as price is now dropping, okay, you can be looking for a short in here because price has started to roll over. We took out the low of your 1 hour candle after liquidity was taken. So this is a change of order flow. And the idea, you guys, is that we can trade safely down into potentially imbalance because price typically will do that. It's not just going to keep going and going and going and going unless, again, a news event or something abnormal might take place. So in this case here, it's absolutely fine to be looking for shorts back down into this imbalance. And let's play through price. Price comes into the candle, and then it just starts melting because we are with the order flow of the 4 hour and the 1 hour changed its structure. It changed its internal structure. As you can see here, we went from bullish to order flow change, dramatic order flow change, retest, it's going to keep going. So now you have a micro trend that's a 1 hour pullback, okay? So then if this is the case and you want to safely trade to the imbalance or whatever, and you want to put your stops to break even and you want to go for it, that is a perfectly valid trade to take. Now, what is also valid, if you want, is as price is moving away rapidly, it's going to be leaving behind breadcrumbs to potentially take other trades from, right? So we have imbalance here. So these would be potentially interesting POIs. This drop-based drop was mitigated. This one was not. This one was not either. So let's just put these out and let's go through price. And we can start to understand, as again, why we have change of order flow with wicks, why it's going the way it's going, and that you don't have to think it's going to go all the way to the moon. But this is a pretty dramatic order flow shift, I would say, right here after this liquidity was taken, right? So liquidity was taken and boom, what? We just took out a high from a low. Well, this would then be a protected order block, right? And this is absolutely valid to take your buys back up to what? Here. Because what's going to happen is price is going to typically do something like this if it's going to keep going lower. It's not just going to keep going lower. So of course you're going to have liquidity taken, which is then going to fuel your micro retracement back into potential POIs that we can sell from. So if you didn't happen to catch this sell because you thought that, for instance, this low needed to be taken from this high to give you a 1 hour chalk, I'm saying that's not the case. These order flow shifts with the candle wicks will start to warn you that mitigation has started to change. Mitigation and sellers are coming into the market that will probably most likely fill this imbalance, right? It's the same reason where all of a sudden you start getting an order flow shift here. Why? Because price is mitigating and then it's going to go lower. Order flow shift to mitigate, then go lower. Order flow shift to mitigate and then go lower. Like, this is how the candlesticks work, okay? So let's just say that you were on the 5 minute and let's see what happens with these POIs. Do we start to get order flow shifts? So in this case here, maybe you want to take a trade and you want to try this and then you want to say, okay, well, for sure it's going to go probably 1 to 2, right? Maybe it goes here, maybe it goes here, maybe it doesn't. We don't know that. That's what we don't know, and that's why managing your trade has to happen, okay? So in this case here, this was the POI. Oh, it filled this fair value gap. So price just wanted to fill that fair value gap. But what's probably going to happen, you guys, is that this here will do this. We'll see. Let's see what happens with the candles. Okay? So this imbalance was filled from here, and then price starts what? Changing its character, and it's going higher, and then we're looking for a better price, right? If we're talking low to high, this is the EQ. So premium now is up here, discounts down here, okay? So we want to be selling in premium. So let's see what happens here. We do have an order flow shift. We did respect this. You probably want to wait on the lower time frame for that to go. Okay, cool. So depending on whether or not you want to wait for price to come back here, or you want to jump in now and you want to go here, that's up to you. You guys can back test and do whatever you want to do. But in a lot of cases, price will come back, and let's just see if it goes lower from here. I don't know. Okay, so that's a nice trade. And this is why it's not having FOMO, because there's a big difference between this at 1 to 8 versus that at 1 to 2. That's not very fun, right? So in this case here, you're already sitting at a 1 to 4 because you waited for price to come back to the origin of the move. Okay, so when we are talking about candlesticks, we'll do a few other examples, guys, on the charts. But when you're talking about OBs, okay, we can start to look for, and if price actually ends up going lower, we can start to look for, why did price here take out this high and then start breaking the lows? So in theory, is this protected high? Well, it should be, okay? It should be, as long as there's some sort of unmitigated area that makes sense. And to me, it makes sense for sure to go to here. It definitely could go to here. And let's see what happens. Well, I don't know why my trading view is so slow. Okay, so there's another mitigation. Probably this is a inducement for this. So in this instance here, you guys, this OB, okay, remember, this is the 4 hour. It was respected to this mitigation cycle of this uptrend, okay? Not every OB melts, but it does typically have a reaction, and it's our job to figure out where that reaction is going to go. So the probable sells are back into demand. And now this trade here was 45 pips. So I'm on the lower time frame. This is a massive trade, right? And we just have to be aware that it's more probable for things to stay with trend until they are ready to actually move over, okay? So maybe price wants to come up here. Maybe it wants to grab this liquidity, and then it's going to go. Remember, liquidity is what drives the markets. Okay. So let's go to another example. Okay, so here's an EU example. So let's say, for instance, you're trading an order block. Price is screaming up here, and you see this order block. So let's just put this in replay mode. Okay. All right. So you have this marked out. Now, a couple things again. We want to see, ideally, some sort of fair value gap for this order block here, right? So we do have a fair value gap. Now, in some cases, guys, you have to go to different time frames to really see it. But like if you look here, right, this order block here, did this order block have a fair value gap? No. Okay. All the wicks, the only fair value gap, guys, was from here to here, and that reacted. Okay. All of this has been mitigated on the 4 hour time frame. Now, there is a fair value gap here. Well, I'm just going to change that. Okay, so in this case here, I would look at this area here, but you also have this tiny little fair value gap that was unable to mitigate. So price is coming up to start to fill these zones, okay? And what we're looking for, guys, based on this video, is a change of order flow inside of price action that can start to warn you that price might actually give you a trade here, right? This having no order block or no fair value gap yes, you had a little bit of unmitigated imbalance in the order block, but price here also did nothing, right? Now on the lower time frame we can look, but you can see based on the fact that there's no buy to sell, okay, or sell to buy area, there was nothing of significance that actually took place here, okay? Now, you can do a few different things, you guys, on 4-hour order blocks. You can wait for the 4-hour order flow to change to then look for really nice sells, or you can go down into like a lower time frame, so 15-minute or 1 hour, and we'll do the same sort of thing with the wicks and understanding how we can see the order flow shift, okay? So if we go to the 1 hour, what we want to start seeing, guys, is you want to start seeing highs getting taken and then immediately lows getting taken, okay? And when you do that, you can definitely start then going and scaling in to your entry time frames to look for your trade setups, because now the order flow is starting to shift. That doesn't mean that you're immediately going to get a win, right? You could still have a loss or two, but we're starting to see why order flow might shift. So let's go to the next candle. So in this case here, order flow has shifted. Now, I would be looking on the lower time frame, you guys, in here for this low to go and then be still selling. It's almost too late here to wait because price can do two things, right? It can come back to there or it can come back to here, okay? But for the sake of this example, let's just step through price. And let's say we do have an order flow change. So you could be looking on the lower time frames for a trade inside of this zone, okay? And whether or not we get one in this instance, we're going to find out. Okay, so in this instance here, you did have a trade, obviously. We can look for price to kind of come, let's just move this. Price to come back into this area and see if we get a continuation or if it just melts. Okay, so in this case, guys, there would have been an order flow change on the lower time frame. That's why I like to trade 15, 30 seconds. And that would have been your confirmation to go down, right? And we want to start looking at the wicks though as well, right? The whole point of what I'm trying to say is understanding the wicks, you guys, and where the order flow is shifted. So did that high go? Did these lows go? Was there imbalance down here? Yes. So yes, you absolutely can see this candle drop and you could sell into imbalance to get a 1 to 2. Sometimes I will do that to scalp due to the fact that this was still my POI because the 1 hour order flow shifted, right? The 1 hour order flow shifted. So price came back into our POI and it sold all the way down to where? The area I said the price would probably sell to, because this is demand. And what can you be doing inside of demand? We can be buying. And as you see here, there's an order flow shift again as price comes down into the demand, right? We see a low get taken and all of a sudden the wicks are failing. So because this is a valid POI in terms of supply and demand, you could then be looking again to take a trade back up into your supply zone, right? And this is what we're doing with this knowledge every day in terms of flowing with price, because we are looking for order flow shifts, okay? We're looking for order flow shifts with the wicks inside of POI, POI, okay? Sell, buy. Now, if you're looking for the order flow to shift bearish, okay, then absolutely you can be looking for your sells and holding if you want, but we still don't know necessarily whether or not this is going to give us a trade. This is why I do say sometimes you want to see order flow shifting on the 4 hour and taking out supply and demand. So what do we have? We have a high taken with your order flow change. Okay, so now what I could be saying to myself is, okay, we took liquidity and now the structure has changed. So you absolutely then could be going into this kind of area again. I'm just going to move this here because this is now my POI. Okay. And I could go then to the 1 hour and I could say, okay, do we get a trade back up into some sort of zone that I like? Now, again, if I'm on the 1 hour, what do I say to you guys? We are looking for the fair value gap. Okay. So this from here to here should get closed, ideally, is what we want to look for. So this is your order block now, right? That's your order block now. And we could wait for price to come back into that again on your entry time frame. So for the group, I know there's a lot of people that still trade 5 minutes. So let's do a 5-minute entry. And we come into here. Now, what do we want to see, guys? We want to see an order flow shift. So what is this? People have asked me, how do I determine a chalk on the higher time frames when there's a chalk on the lower? Well, this is a chalk on the 5-minute. Sorry, it's a chalk on the 1 minute because you had a high with your immediate low taken. So if we go to the 1 minute, high, low, chalk. Okay, we also filled the FVG here. Okay, we've also filled the FVG, and what do we have? We have an order flow shift. We made a high and we made a low. This is price telling you it wants to go lower. It's up to us to figure out and put the pieces together. Is this going to go lower just to here? Or is it going to go lower now because we're trending down on all of the time frames? The 1 hour, the 4 hour, we've already had our change of character on the higher time frame. So I would be very confident right here taking a sell. Now you can wait for price to come back up to here. I'd probably want to cover this high even though the FVG got filled. But again, if you're confident in this being a strong high, you can absolutely do that. Or you could just sell from this candle, believing that price now has changed character. So let's just wait and see if price comes here, and let's try something like this. See, and that's the thing. Sometimes it doesn't, and it still might. We don't know. Let's see. Oh, so if you take the OB, guys, you're tapped in. 50% of this, I don't know if we'll get tapped in. I'll just leave it at the OB, but this is where you guys can back test. Ooh, we might get mitigated. And this is what I was saying. So before this gets stopped out, guys, sometimes it's good to cover the, this is your drop, base, drop. So sometimes that is good. I personally, I will take this loss. I don't mind because I like a tighter stop loss. So for me, I don't care if this loses. But for people that are new maybe to this strategy, you can look at covering the rally-based rally or whatever. Especially, guys, if you're flowing with the 4-hour order flow. Okay, and then I just want to highlight here as we play this out. What do we have here again, guys? Okay, we've now tapped into our rally-based rally. And on the 5-minute, what do we have? We have a high and a low. So I would be comfortable again looking for sells. Now whether or not price comes to this order block is another story, but we're going to try it and we're going to take it. We're just going with the flow of price. Okay, so that would have tapped you in if you covered the bottom of the order block. Sorry, I'm moving pretty fast here because I don't have 8 hours and I'm sure you guys don't want an 8-hour video. Okay, so price came in, tapped a little higher, and that's good. Oh, gapped up. Let's go to the 15-minute and see what happens and just move a little faster. Okay, so now if we go to the 1 hour, you guys, you can absolutely be trading these again to here, or you can start to look for different POIs. So, I mean, I would be looking at potentially these sell to buys. This one here is, so sell to buy, I mean, that'd be 1 to 7. Or again, you can target the imbalance of the 4 hour if that's what you traded from your 4-hour POI, right? You can do that. Just make sure to pay yourself along the way, right? Pay yourself along the way. Now, let's see what happens here. I don't know if this takes out this whole low. So this is running pretty good, you guys. This would already have been 1 to 6, and there's another one here. Where is it? Let's go back to the 15 minutes. Sorry, I just want to make sure you guys see all these. And this one, if you did take this one's 1 to 2. See, and that's the difference, you guys. When I'm okay taking a couple losses because I really want to have a tighter stop loss. You just get more value for your money. But you know, everyone trades differently, and that's fine. So let's keep going with this price and see. I don't know if this example actually runs the low or not, but that's not really the point of this conversation. It's about how to flow with the wicks and understand where you guys can actually get trades from. Okay? Where you can actually get trades from. Yeah, so in this case, okay, so it's spiked up. But we got as low as, you got as low as almost 1 to 9 on that trade. Now you would have had a better RR on the 1 minute, personally. You would have. But that's okay. Everyone trades different. So inside of this price action, though, just for the people here, when your high gets taken here, guys, on the 1 minute, inside of our 4-hour OB, when the high gets taken and now we're breaking structure, this then becomes your strong high, and then you can look to short off this order block with your stop loss above. So on the 1 minute, there's a few better entries there. That already would have been 1 to 12, and then price ended up going a little lower. But this is why I like to trade very, very low time frames, because I know what I'm looking for, and I'm just teaching you guys how to go through the mitigation cycle of the candlesticks. Okay? So let's delete that. Let's delete all this stuff. And again, we can go back and look at another trade that took place here, right? So price went up, took this liquidity, and it immediately wiped the range. And again, what are we saying? You can be looking inside of here or the fair value gap here for your continuation model to start filling the lows, right? So price did end up coming there. And then again, what are you looking for, guys? We'd be looking for, whoops. Inside of this price action, we want to start to see a high getting taken, and then candles starting to break the bottoms, right? This is your order flow shift. And you guys, it's very important to understand, like all these, candle taken to the low, immediate take to the upside. So your order flow is shifting. Why is order flow shifting? Because it's probably coming to fill the imbalance. That's just how the Forex market works, okay? So based on all of that, if we look at the trade this morning that I took, so this is February 18th. This one here. Price came out and took the daily low, you guys, right here. And I was on the 15-second chart. And this was the trade this morning. So what do I start to see? I knew that the daily low from yesterday was here. Okay? Or sorry, I think it was actually up here, but right here. And price comes down, it starts creating supply, and then boom, we have an order flow shift. And as soon as this candle, guys, this one right here, took out this high, with all of this imbalance up here, I bought. That right there was my entry with my stop loss right there just below this low. I felt like for the day, okay, for the day, I felt like this would be the strong low of the day because we were responsible for taking out liquidity, right? And if I was wrong, I was wrong. Like, it is what it is. But when I pair this with my strategy and looking at the mitigation cycle and looking at imbalances, as I posted to the group, you guys saw that I had this trade here. Now, my full TP was this high. But let's go back to the 1 minute. What do I see? We see fair value gap. I partialed here. What do I see? Fair value gap. I partialed here. Okay, I could have sold again here. I didn't. So it is what it is. But the high, low taken out, chalk after fair value gap would have been a really nice sell. And then what happened again? Low taken out. My stop loss actually was still respected. Okay. So I actually held this trade because like I already made most of my money up here. I didn't really care. I was more curious to see if we'd actually run this liquidity, but it's Friday, so I ended up closing closer to here because it's already noon and I'm not going to hold. But what do we have again, guys? Order flow shift. Low taken, high taken. You absolutely can be buying on the pullback. Okay? And that's just the way I see the market, and that's what I'm trying to teach you guys is understanding where you are in price and the mitigation of candles so that we can actually start flipping through time frames and understanding, okay, so we bought up to supply, cool. Order flow shift, yes, sell. Oh, failed to make a new low, okay, so we're probably going to run the high. That's what happens. If a low fails to make a new low, it's probably going to grab liquidity somewhere else. So in this case here, it did grab this liquidity above that high, and now it's starting to retrace. Will it go this way? We don't know. It's probably going to be next week. But this is what I'm trying to teach you guys and understand when you have order flow shifts. Okay, so price in here took liquidity, and right in here, I guarantee you, you had a 1 minute order flow shift. Yes, you absolutely can be buying back into these fair value gaps. And then this is your this is your high probability sell with trend sell. So yes, you should be selling and you can hold to the next low. All right? That's what we're doing every day for me on one pair, Euro USD, every day, all day. Wherever I see supply, demand, and wick changes, I'm looking at where price wants to go so I can get in and out. I don't necessarily need, guys, a 1 to 10, but I can get a 1 to 10 off 3 or 4 scalps, right? I can get a 1 to 5, 1 to 4, 1 to 3, boom, there's 1 to 10, right? I can do those things daily, efficiently, by just flowing with the wicks, the order flow, the mitigation cycle, and understanding on the lower time frames why price is starting to now change character. Okay, so I hope this video was helpful. I hope this video clears up some things about how I trade. What am I looking for, right? I'm just going to wrap this up one more with another example. High taken, we start taking out lows, so you can absolutely be looking to sell from these zones to clear liquidity. And this actually was a trade I took. I took a buy here the other day. I posted that in the group. So, yeah, I hope this was helpful, guys. Hope you enjoy your weekend. And, you know, if you have any questions, obviously reach out to me in the group. But this video, along with the chalk video, guys, is the strategy of how I trade the markets, mitigation cycles, supply and demand, understanding order flow. What does that mean for price? And it might sound complicated, but I'm telling you, once you practice this, it's actually quite simple. And you're going to start to see stuff like this instantly. Like, why did we tap into here and now have an order flow change? Oh, we have imbalance up here, imbalance up here. So absolutely, I can at least be buying to these levels. And if price goes further, great, bonus money. Or if price starts respecting demand, we'll buy off these demand levels as price comes back. We have an order flow change on the lower time frame. Keep buying, okay? So, yeah, so I'm going to leave it there. Hope that was helpful, and have a good weekend.